Hi, I'm Jerry Slusowitz. Welcome to another one of our Money Talks videocasts. Today is Wednesday, April 4th, 2012. The market today had only its second triple-digit down day for 2012. First quarter was outstanding. S&P had its best quarter since 1998. That's a lot of years, 14 years. But it's been a tough decade plus, almost 12 years, where the markets had fits and starts. So the real concern is what's going to happen going forward. 12% in a quarter is better than the average return that we've had for the last 100 years. So have we seen all the gain, or is there more good things to come? Well, it is an election year, so I'm somewhat optimistic as we head into the second half of the year, as most of the incumbents that are going to run for re-election all want to get re-elected. They're going to do what it takes to try to make things look good. But again, April 4th, there's an old saying that says sell in May and go away, and then you come back basically in November. That's kind of the concept. 6 months in, 6 months out. And it's actually been a pretty good 6 months to begin, the last 6 months. But the Federal Reserve and the European Central Bank have done their part to sustain the market. It was a Wall Street Journal article, March 28th, last week, talking about how the federal deficit, the United States Treasury, 61% of all the new bonds being issued over the last couple years are being bought by the Fed. 61% of the trillions of dollars in new debt that we're creating every year is being bought by the Fed. That's kind of like the left hand selling it to the right hand. Normally, if we want to borrow money, we borrow it from, various sovereigns, the Chinese or the Japanese used to buy a lot of our debt, institutions, pension funds, hedge funds, they could buy it. Individuals could buy treasury debt. But now what's happening is a huge amount is being bought by our own Fed. So it's very, very concerning when you're offering debt with the one hand and buying it to some degree with the other. Now, I understand the Federal Reserve Bank is a private entity, but it does seem like they're in cahoots together, since the Federal Reserve Chair, Ben Bernanke, is appointed by the President, and the Treasury Secretary, Timothy Geithner. They all work pretty closely together. Now, I'm not saying that this didn't happen before and didn't start under President George Bush. It did, but the rate of borrowing has escalated as other borrowers, other lenders have dissipated. So it's a concern we have going forward. Is that going to be a problem next week, next month, or next year, or is it going to take 3 years for this to be realized? Time will tell. But there are still problems out there. A lot of the economic numbers, particularly coming out of Europe and to some degree China, are showing slowing. It's not crashing, it's not falling off precipitously, but rather than in an economic downturn we want to see growth, we're seeing it going the other way. It hasn't reached the point of contraction, but it's a slower rate of growth. So that's not good either. We're seeing that here in the United States as well. So, we're really, really concerned about the near-term prospects for the market. I do think that later this spring, early summer, if we're going to have problems in 2012, they're going to happen earlier now than later. If you recall, in December, and you can look this up at my writings and things like that, I was calling for a great bull run at the start of the year. Very fast charge out of the blocks when most people were negative. That happened. So now we're adding caution. We're not, overly negative, pessimistic, but I think a pullback is in order. 1340 on the S&P is the major support number. If we break below that, I think the 50-day moving average is somewhere around 1370. But 1340 is your critical support. It's the low that we had early in March that we bounced off of. Today's action, it's too early to tell if there's really more to it than not. But I am, somewhat concerned about the near term, mostly because of the debt and the real slow-down rate of growth that isn't positive. We're heading into a 3-day weekend. Happy Easter for those of you who enjoy that season. Generally, 80% of the time the market goes up into a 3-day weekend. That means 20% of the time it goes down. But Friday's off, so we should see at least a little reprisal tomorrow in the market. Should go up a little bit, and we'll see how the numbers come out and regather next week. Next week we'll start earnings season early in the week. It doesn't get too heavy for a couple more weeks, but the one company to watch their earnings is Apple. That's going to be the real tell of how the markets do going forward. Again, if you want, sign up for our free money management tips. It's on our newsletter. And also, please tune in next time for another Money Talks video. Have a great week.